Look at this right now. Euro to US dollar is sitting at 1.1437 after a soft US CPI number that was supposed to light a fire under the euro. Instead, the pair printed a pathetic pop to 1.1500 and then got slammed right back down. That is a classic bull trap. There is one danger zone and one hidden opportunity right now. I'll show you both. If you are holding a long hoping for a recovery, you are trading against the strongest bearish undercurrent we've seen in weeks. Stay to the end. I'm giving you 2 scalp plays and 1 swing trade you can execute today, plus the one headline that flips everything. Right now, my session bias is fading. I am looking to sell rallies and sell breakdowns. The weekly trend is a strong sell, the 1-hour trend is a strong sell, and the daily is neutral only because it is coiling inside a tightening range. The single invalidation level that flips this whole picture is 1.1500. Write this number down. If we break and close above 1.1500 today, the entire bearish structure resets and we could see a rapid squeeze towards 1.1577. But here is what matters most. The herd is still long. Retail positioning data shows that small speculators added to longs near 1.1480 over the last 48 hours. And where are the stops? A massive stop cluster is sitting just below 1.1423, the intraday support. If price breaches that level, the cascade will be violent. Just this morning, BofA released a note flagging 3 bullish dollar themes for the second half of 2026, and that macro tailwind is already being priced into the DXY. The dollar index is coiling, and if it fires, Euro to US dollar absorbs the full downside. Let's get into the charts. Start with the weekly. The weekly candle is shaping up as a bearish engulfing following a rejection at the MA50, which sits at 1.1504. That's precisely the resistance zone. The MACD on the weekly remains below the signal line, and the histogram is deepening into negative territory. That tells me there is no real buying pressure of any consequence. Move down to the daily. Price is sandwiched between the MA20 at 1.1444 and the MA200 at 1.1558. That's a massive gap. Right now we are trading below the 20-day moving average, which is acting as dynamic resistance. RSI on the daily is at 46.8, sloping down but not yet oversold, so there is still room on the downside. The daily trend is officially neutral because we haven't broken the 1.1423 floor, but everything about the momentum is leaning south. Now drop to the 4-hour. This is where it gets interesting. The 4-hour chart shows a failed breakout above 1.1500 and a clear series of lower highs. The MA60 on the 4H is sloping down at 1.1460, and price has been unable to hold above it for more than one candle. Here's what most traders miss. We are seeing a hidden bearish divergence on the 4-hour MACD. Price made a slightly higher high on that CPI spike, but the MACD histogram put in a lower high. That signals the rally was weak and distribution was taking place. The 4-hour ADX is at 27.7, rising, confirming a trending environment, not a ranging one. The directional movement lines have the EUR DI above the plus DI, so bears are in control. This hidden divergence is the fuel that can drive price through 1.1423 like a hot knife through butter, and then on the 1 hour, it's a strong sell. We've got a bear flag that has already completed its measured move, but momentum is still accelerating. The stochastic is at 50 and curling down from neutral, giving a fresh cross lower. Williams %R is at minus 38, nowhere near oversold, so there's no exhaustion. The 1-hour CCI is dropping from a 135 reading, which was overbought territory. That rollover is a textbook sell signal. And here is a fresh insight I pulled just an hour ago. The options market shows a massive €1.4 billion expiry wall at the 1.1400 strike for the New York cut. When there's that much gamma parked at a round number, price tends to gravitate toward it. That expiry is acting like a magnet. So all these technical signals plus the option flow are pointing to one thing. The 1.1400 level is going to get tested, and tested hard. On the fundamental side, the narrative web is tightening. Last night's soft CPI did not change the Fed's hawkish posture, because core services inflation remains sticky. The policy divergence between the ECB and the Fed is widening again. While the ECB is signaling a potential pause, the Fed is talking about holding rates higher for longer, and the two-year yield spread between the US and Germany is widening in the dollar's favor. BofA's three bullish dollar themes, resilient US growth, fiscal premium, and safe haven flows, are starting to dominate the conversation. And if you cross-link this with equities, the S&P 500 is struggling near its gamma flip level, and Bitcoin is failing to hold its 50-day moving average. That risk-off current feeds the dollar bid and punishes the euro. My 1 to 2 week directional lean is bearish below 1.1500, targeting 1.1346. The event that invalidates this is a daily close above 1.1577. That's the line in the sand. Question for you. Do you think the dollar breaks 105 this week? Comment yes or no. I'm tracking consensus right here in the comments. Most people skip this section. That's exactly where the money is made. Keep watching. I'm going to give you 3 trade setups, with exact entries, stops, and targets. Write these down. Strategy 1 is the opening scalp. This is a high probability fast snipe on the 5-minute chart. When London opens, I expect a small bounce toward the intraday resistance. The MA20 on the hourly is at 1.1444, and that's where short-term sellers will reload. The exact trigger condition. Price taps 1.1445 and prints a bearish engulfing candle on the 5-minute time frame. Entry is at the close of that engulfing candle, around 1.1445. Stop loss goes at 1.1465, just above the latest swing high and above the 1-hour MA60. Take profit 1 is at 1.1425, the area just above the session support, giving a tight 1:1 risk reward. But if momentum extends, take profit 2 sits at 1.1400, right at the option wall, which delivers a 1-minute and 2.25 second reward. What instantly voids this scalp? If the 5-minute candle closes back above 1.1470, the structure breaks and you step aside immediately. The opening scalp entry, 1.1445, 5M bearish engulfing after tap of MA20, stop loss, 1.1465 take profit 1, 1.1425 take profit 2, 1.1400 risk and reward, (1:2.2 invalidation, void if 5M candle closes above 1.1470. Strategy 2 is the liquidity grab. This is a counter-noise scalp designed to exploit stop hunts. On the 15-minute chart, identify the quiet overnight high. Let's say that level is 1.1472. We know the stops are building just above that. If price spikes above 1.1472, sweeps the liquidity, and then immediately reverses with a 15-minute bearish engulfing close back below 1.1460, you enter short at 1.1460. This is a fake breakout trap. Your stop loss must be extremely tight, placed at 1.1485, just above the wicks extreme. The target is fast, 1.1430, the nearest intraday liquidity pool where short-term buyers might step in. That's roughly 30 pips of profit for a 25 pip risk, but the win rate on these fake-out grabs is high because you're trading alongside the smart money that just ran the stops. Warning: this requires fast execution. If the reversal candle is small and wicky, don't take it. Wait for a clean body close. The liquidity grab entry, 1.1460, after 15 minutes bearish engulfing close below spike high, stop loss, 1.1485 take profit, 1.1430 risk. And reward, (1:1.2 invalidation, void if 15M candle closes back above 1.1475. Are you scalping or swinging this week? Comment scalp or swing. I want to see where this community sits. The next signal changes everything. Strategy 3 is the session swing, aligned with the dominant bear trend. This uses the 4-hour structure. The trigger condition is a 4-hour close below the critical support of 1.1423. That break confirms the daily floor is gone and opens the trapdoor. Entry would be on a retest of 1.1420, allowing a little cushion for the spread. Stop loss is placed at 1.1500. just above the daily resistance and the MA50. That's a wide stop, but it's outside the daily range structure. This gives the trade room to breathe. The conservative swing target, take profit 1, is at 1.1376, which is S2 support and a prior monthly pivot. The stretch target, take profit 2, is at 1.1346, the S3 level where I expect a massive reaction. Once price reaches halfway to TP1, around 1.1390, I'll move the stop to break even and then trail it by 25 pips. The invalidation that would flip the medium-term outlook is a daily closeback above 1.1500. If that happens, the breakout fails and we could rally hard. So this swing has a risk of 80 pips against targets of 44 and 74 pips, giving a blended reward to risk over 1 minute and 1.5 seconds, but with trend alignment the probability is strong. The session swing, entry, 1.1420, after 4 hours close below 1.1423, retest entry, stop loss, 1.1500 take profit 1, 1.1376 take profit 2, 1. 1346 risk and reward, (1:1.5 blended invalidation, void if daily close above 1.1500 risk management pulse, keep this tight. Never risk more than 1 to 2% per trade. Scalps demand even tighter risk, 0.5% if you're taking multiple shots. No positions through high-impact news. The next big US release will whipsaw everything. Stops are non-negotiable. This is how you survive to trade the next big move. The single most critical level for the next session is 1.1400. If we take that out with volume, the entire monthly trend flips from neutral to a strong sell, and the measured move targets 1.1250. Tomorrow, I'm watching the US retail sales print and the final PMI data. Any strength in the consumer and we could see the dollar ramp through 105, which would be the catalyst for that euro freefall. If this level breaks, I'll have the updated blueprint 24 hours from now. So if you want the full breakdown on Aussie dollar, Japanese yen, Nike 225, those videos are live now on our Alpha Market Meridian channel. Gold, Nasdaq, and Bitcoin are published on the Market Meridian channel. Please click the link at the top of this channel's homepage to access the complete institutional suite. Hold the like button and subscribe. Every signal helps the algorithm bring you the levels that matter. The trap is set, the stops are clustered, and the smart money is already positioning. Get in front of the move, not behind it.